Okay, so now I'm going to show you an example of trading the smart money concept approach on multiple time frames. And this time it'll be as if you were trading the London session. So starting on the 15-minute chart, you're going to want to draw the market structure for the most recent two waves. So beginning from the top, we have to make sure we have the blue path for our 15-minute chart. So beginning from the top, we have lower low. And I'm going to do this a little more quickly than prior examples, just so we can get to the smart money concepts. So here we have a low, no real pullback until here. And we start to see that we have a higher high. This is not really broken till this candle here, so that is a valid pullback, but it does a lot of ranging in the meantime. And this low is, let's see, this low creates a lot of wicks. Honestly, there's no valid breakout, so we don't really see any kind of real low until here. But then we do see a higher high. I look back because I'll point out that this trend is continuing from a bigger downtrend. So if this is the most recent pullback, then we are in a there's a high, a lower low, a lower high, lower low. So that's a downtrend. This area would have to be broken for the 15-minute. I'll just mark it right now real quick. This is the 15-minute BOS. Alright, we'll just leave that as is. So structure is pulling back. To this level. Even here we don't have let's see. Okay, so we do have one pullback candle there, and then this candle closes there. So we do have some pullback structure. And then this is a fake breakout, so this is the real breakout. So 15-minute is down overall. We'll record it as such. But it is returning to the previous pullback area. So the previous key level. We'll mark that as well, just to know where it is. However, in this structure, there is a ton of liquidity. There's imbalance. First of all, between this candle here and this candle down here, this high, this low are very far apart. Again, this high, this low has a little bit of imbalance, and then down here, this high, this low also has imbalance. So here is a ton of imbalance. So we can expect price to want to come back and fill these orders that were missed as price continues the downtrend in all likelihood. That's what we expect what will happen. So in this wave, let's check out the 5-minute. You know what, before we do that, let's run a fib here. So there's a little bit of imbalance here just between these two candles. It's not huge. The third candle is not a Mariposa candle, so I'm not sure we can call this a truly imbalanced area. So since our imbalance is up here, we'll run the fib from this low to this high, which means we're going to be looking for a order block area in between this zone, and if we take it right off of the 15-minute, there's this last down candle before price moves up again. We'll check this area on lower time frames as well, but for now, this is a 15-minute POI. So going to the 5-minute structure, we're just going to look at this last wave. You know, on the 15-minute, we can add the key level down here too, just to know where they are. You're going to be doing this with the full strategy as well. But now on the 5-minute, just coming from the 15-minute key level, first we'll change our path to red. Coming from the 15-minute key level, we have just this pulse up with no real pullback in that movement. We have this lower low here, but this candle creates a range, so there's no real pullback here either. So we can just create this structure here, which also gives us another sign of this being a very valid level when there's no valid 5-minute structure within the 15-minute pulse. Price will definitely want to come back down this way to create at least a lower low. So, or to break the structure. So at this time, we're going to leave the 5-minute as just an up movement. We can check the 1-minute, but because we don't have true 5-minute structure, we should really just be focusing on these higher time frames. And let's watch price move a bit. The 5-minute. So from this structure alone, we could place an order here near the 15-minute POI zone. And we'll use a healthy 5-pip stop loss. And we can target near the high as a take profit zone. On the 15-minute chart, since we already found a POI on that chart, I want to check where the recent high closes. I think this would be better. So this would give us a 3.8 risk to reward to risk ratio. But we'll check everything out on the 5-minute, even though our setup's on the 15. Because we're expecting downward movement, technically this is a bit counter trend, but because of all this imbalance here, we might as well use the opportunity. So price is pulling back. And the 5-minute is creating a downward structure, so we should note that as well. 15 minutes down, the 5-minute, even though we're waiting on a pullback before it can break higher, we are seeing this like inner structure. There is some downward pulses and pullbacks in that. And let's see, did it hit? All right, we're in the trade. Price almost hit the stop loss. Let's see if it survives. Because structure is kind of unclear on all the 5-minute and 1-minute, we are really just taking a 15-minute level trade. Okay, it looks like take profit was hit right before shooting back down again. There was a news release at this time, so if you held out, you could have gotten nearly a 4R return. However, I recommend closing your trades before news releases, so your close could have been down here, still giving you at least a 2.5 return for your risk, which is really good. But this is an example, at least on a higher time frame, of how you can use smart money concepts to find opportunities to take a trade with when imbalance is present.